The eagerly anticipated Bank of Japan meeting was the main focus last week, and new Governor Kuroda didn't disappoint. The Japanese yen was sold off broadly after Kuroda announced a radical overhaul of the monetary easing policy. Whilst weakness in the yen caught most of the attention, strength in European majors was also impressive towards the end of the week. Despite all the negative news coming out of the Eurozone, the Euro staged a strong rebound as European Central Bank President Draghi emphasised the determination to defend the Euro in a post-meeting press conference, and the common currency picked up strength from there on. A string of weaker-than-expected economic data, including ISM indices and the non-farm payroll, sent the greenback lower against European majors, but commodity currencies also weakened, partly on data and partly on risk aversion. Technically, yen's weakness was the clearest trend in the market last week, and that's expected to continue. Investor George Soros pointed out that if the Japanese realise that the yen's decline is liable to continue, they will want to transfer their money abroad, and this will become like an avalanche. You can start it, but you can't stop it. Key economic data from the US last week was largely disappointing. The non-farm payroll only showed an 88,000 growth in March, less than half of the expected 190,000. That's also the lowest number since June 2012. February's figure was revised up from 236 to 268,000, but that was not enough to cover the miss in March's figure. Combined Q1's total job growth was 504,000, much lower than Q4's 626,000. Although the unemployment rate edged lower to 7.6%, the ISM non-manufacturing index dropped from 56 to 54.4 in March, and the ISM manufacturing index dropped from 54.2 to 51.3 in March. The European Central Bank announced to leave the main refinancing rate unchanged at 0.75% and added no new unconventional monetary easing measures in April. The central bank expects the economy in the Eurozone to recover later this year, but uncertainty remains. Policymakers pledged to monitor very closely all the incoming information on economic and monetary developments and assess the impact on the outlook for price stability in the coming weeks, and would stand ready to act. It's believed a key factor in driving the euro higher was Draghi's strong emphasis on keeping the euro in the post-meeting conference. Draghi said that some people had vastly underestimated what the euro means to the Europeans and vastly underestimated the amount of political capital that had been invested in the euro. He strongly stated that there is no plan B. The Bank of England left rates unchanged at 0.5% as expected and maintained the size of the asset purchase programme at £375 billion. Only a brief statement was released, and focus will turn to the minutes to be published on April 17th. In their April meeting, the new Bank of Japan board announced aggressive measures to combat deflation and boost the economy. Policymakers shifted its monetary policy target to the monetary base from the overnight call rate and pledged to double its government bond holding in 2 years. The move shocked the market, sending the Nikkei 2% higher, but put pressure on the Japanese yen. These moves signal the Bank of Japan's determination to boost the economy and combat inflation. However, some doubt whether these measures will be sufficient enough to produce significant results. The Canadian job market contracted sharply by 54,500 in March, compared to growth expectations of 9,000. That was more than offset by February's growth of 50,700, and the total figure for Q1 was a loss of 25,700, which was the first quarter of contraction since Q2 of 2012. The unemployment rate also ticked higher to 7.2% compared to expectation of 7.1%. The Reserve Bank of Australia left the cash rate unchanged at 3% in April. Policymakers stated that the current economic conditions justified leaving interest rates at a record low, yet the inflation outlook suggested that further easing is possible. Domestic economic growth was close to trend last year. However, the Reserve Bank restated that mining sector investments are peaking and other demand sources are needed to sustain growth. The government did not comment on the job market, probably due to the lack of material change from the previous meeting. Overall, the tone for this meeting remained dovish, and further easing is still likely. The upcoming week features Fed Chairman Ben Bernanke's speeches in Stone Mountain and Washington, D.C. Federal Open Market Committee meeting minutes and U.S. retail sales also feature among the major events. For all the Forex news affecting the markets, please join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.